Hello, I'm Per Nyberg. This is Counting the Cost on Al Jazeera, your look at the world of business and economics. From oil refineries to Wildberries warehouses, Ukraine is hitting Russia's vital economic sectors hard. Well, this as spending is climbing and revenues are shrinking. So is Moscow's war economy beginning to crack? Oil may be giving the Kremlin another lifeline. The Iran war is pushing energy prices higher. But for how long will that windfall last? And could new U.S. sanctions finally tighten the screws? Now, Russia's economy held up longer than many expected, defying Western sanctions. But 4 years into the war in Ukraine, the strain is starting to bite. Growth is forecast to slow to its weakest pace since 2022, and the budget deficit is widening. And Ukrainian strikes are reaching deeper into the economy, from oil infrastructure to Russia's biggest online retailer. But Moscow's pockets remain deep, with more than $300 billion in accessible reserves. And the Iran war has just handed Russia a windfall, sending energy prices higher, boosting Moscow's revenues. The U.S., though, has moved to cut that off, with the Senate backing tariffs of up to 100% on Russia's biggest energy buyers. So is the pressure finally breaking the Russian economy, or is the Middle East conflict propping it up? Laura Khan reports.
Ukraine's major drone strike on Russia's Belgorod city not only caused extensive damage, smashing into apartment blocks, homes, administrative buildings, but also targeted what Russia called unspecified commercial facilities. And these hubs are in Ukraine's crosshairs. It has hit 23 Wildberries warehouses across the country in less than 3 weeks. That's Russia's largest e-commerce giant, widely considered a linchpin of its economy. It's already affected tens of thousands of businesses that use its website to sell their products.
There is a psychological impact, understanding that they are no longer secure. Wildberries is one of the major Russian retailers, one of the driving forces behind Russian economies.
Ukraine is also taking aim at Russia's oil refineries and tankers, with at least 30 attacks last month, while large-scale Russian missile strikes on Ukraine continue almost daily. But the cost of war is putting Russia's economy under strain. Its finance ministry has placed the deficit at about $74 billion in the first half of the year, and that's around 2.5% of its GDP, and 1.7 times higher than the same period last year. Now, the Bank of Russia is warning that this puts the country at risk of inflation. And to help finance a gap, Moscow has been selling gold from its sovereign reserves. Official figures now show they've dropped to the lowest level since 2022. But the war in Iran has given Russia some relief. Months of blockades in the Strait of Hormuz led to the disruption of Gulf oil exports. Now, this pushed global oil prices higher, forcing buyers to look elsewhere. And Russia has stepped in to fill that gap, exporting more oil, specifically to Asian countries, including China and India. And higher oil prices means more revenue. But it may be a temporary windfall. The US Senate has passed a Sanctions Act that could mean countries that buy Russian oil and gas could face large tariffs. That will raise the cost of buying Russian energy, putting it at risk of losing its biggest export markets, meaning the disruption in the Strait of Hormuz may be a quick fix for its oil revenue, but not its long-term solution. Laura Khan for Counting the Costs, Al Jazeera.
And let's go ahead and bring in our guests into this conversation. Joining us from Verona is Chris Wiefer. He is the CEO of Macro Advisory, a strategic consultancy which focuses on Russia and the Eurasia region. In Berlin, we're joined by Yanis Kluge. He is a senior associate focusing on the Russian economy at SWP Berlin. And in Antalya, we're joined by Vyacheslav Michenko. He's a Russian energy analyst based in Moscow. A warm welcome to all of you. Vyacheslav, let me just start with you, just as a first question here. Are things looking up or down for the Russian economy?
So I'm not actually balancing between this up and down, because I think the economy in general and global economy and national economy is always going through the up and downs, as you say. But I think if we're talking about the oil and gas sector, so it's quite controversial period for Russia, because from one hand, we will discuss it, there are some difficulties actually to export Russian crude eastward, westward, but actually there are a lot of opportunities now with Russian commodities coming to the Oriental markets because of the crisis with the Middle East and other obstacles actually to supply, especially crude and LNG to the Asian markets. And I think Russia is very well positioned now to increase the production and the exports to the Oriental markets, as I say.
All right, let's dig into the details of all of this. I want to start out with looking at the Russian economy, what it's spending and what it's actually having as an income. Let's take a look at this here. So, revenues and expenditure. Let's take a look at this. It entered 2026 already quite under heavy pressure. Down here, we've got income from oil, about $45 billion, roughly, something like that. Total spending, it's that number right up there, $300 billion. Total revenue, around $227 billion. And this gap here, right here, this is the big number, about $70 billion in the gap, the difference between the income and what Russia is actually spending. Chris, does this mean that Russia is having a serious problem in terms of its finances?
No, excuse me. No, it's not a serious problem. For sure, it's challenging, I suppose, is one way to put it. It's certainly facing difficulties, and it is running a much larger budget deficit than had been planned. But you cannot describe it as, say, a serious situation in the sense that we are not looking at any risk of a financial crisis. We're not looking at the risk of any economic crisis. And really, you could describe the economy as being stagnant, which basically means that growth is very minor. We had a surprisingly good number yesterday for Q2 GDP, which grew at 1.3% year on year, much better than people had expected. But there are one-off factors which drove that, which I can go into if you wish. But for the year, we're looking at growth, for GDP growth to be about between 0 and maybe 0.3, 0.4. So very much a stagnant situation. But despite the big deficit, no risk or no threat of a financial crisis.
Yanis, what's your view on that? How long is this sustainable to have this kind of budget deficit?
Well, it is probably sustainable for a few more years. Russia in total has rather low government debt. But I still would say that the situation has significantly worsened this year. Russia actually wanted to cut spending significantly, also in the military this year, and the opposite is happening. And if you look at what markets are saying, they are agreeing that the situation is serious. For example, if you look at the borrowing costs of the Russian government, so how much is the interest rate on long-term bonds? We saw a new record this year, actually, in some long-term bonds. So investors, banks, they want to be compensated for the risk of lending money to the Russian government. And this always tells you that they are skeptical about the longer-term prospects.
Let's take a look at the revenues from oil and gas, because these are important figures considering everything that's happening in the world. Here we go. So this is from the numbers of 2025. This one showed a number of Russia already coming in under quite some heavy pressure. This was actually the lowest since 2020. Moving on to the forecast for 2026, we're actually seeing an increase, according to the forecast, of about 10%. This is actually a lot due to higher oil prices. Just looking at the figure for July, year on year, according to Reuters, we're seeing a 60% increase just on oil and gas revenues just for the month of July. Vyacheslav, these higher oil and gas prices coming from the Iran war, do you think that's actually a good thing then for the Russian economy?
I think we're talking about the momentum, and of course it is good for not only for Russian economy, but in general for oil and gas producers and exporters, except those who are blocked now in the in the Gulf. And unfortunately, the situation doesn't move. So the Hormuz Straits are closed. And I think the key economies like China, India, other Asian, especially Asian economies, they're looking for the alternative. And I think Russia is very well positioned on the Oriental markets with infrastructure already there, which is actually, I'm talking about the ISPO pipeline, crude, and it's very well positioned actually with, I just looked through the statistics. I think China is the key purchaser of Russian crude now. They bought from the 42 cargoes on the spot market. I'm talking about ISPO crude. They bought 35 cargoes actually now, and India is actually willing. The willingness of India to increase the Russian supply is big because India is still balancing between those flows that I think supplies from the Gulf.
Yanis, are you seeing these kind of trends as well with countries like China now turning to Russia to get their oil?
Well, China has been a major importer of Russian energy for a long time. They have increased their imports after Russia started its invasion of Ukraine. So some of Russian oil flows were diverted to China, but most of what used to go to Europe in the past is now going to India. So yes, there was a major reconfiguration, but it's costly for Russia too, because of course the oil price in Russian ports. So without transportation costs and without discounts that maybe you have to allow to your Indian customers because they don't want to have the sanctions risks attached to this oil, Russian oil sometimes is about $20 cheaper in Russian ports than comparable North Sea oil, Brent, for example. And this, over the years, it's tens of billions of dollars that Russia is losing from this reconfiguration of flows.
So let's take a look at the consequences of these Ukrainian strikes on Russia. In the month of July, at least 30 energy facilities were targeted by Ukraine. And that, of course, is having an impact on the refining output. Let's look at the numbers here. In May of this year, we have a number of 4.6 million barrels per day. And then moving on to July, we're looking at 3.6 million barrels per day. So a complete nosedive, basically, between these 2 and 3 months. Vyacheslav, how significant is this impact?
So I think, as my colleagues already noticed, actually, there is a balancing, the momentum, which you can balance between the producing and refining the crude domestically, and you can just send more crude to exports. But if we're talking about damage to the refining facilities, actually you can cover it with the imports, which already going on. So some sort of, some volumes coming even from India, which already, as I said, the key buyer of Russian crude. So you can balance these domestic market needs with the gasoline, with diesel, by importing, by covering, this gap between this production, domestic production and market needs. But this is momentum, as I said. So, but you can gain more, actually more money and as I said, more revenues by selling just crude oil. And I think what's happening now, so Russia is increasing, as I said, eastward, like China, India, and other nations. By the way, the free cargoes now are available for Indonesia and Malaysia, and Vietnam and other countries they already declared that they badly need additional volumes of crude, which they can't get now from the Gulf.
Chris, just take a look at this figure again, this complete nosedive, as we talked about the refining capabilities in Russia. Putin says, well, of course, yes, Ukraine strikes, they are inflicting a heavy damage on the country, but we are recovering. Would you say that this is just a temporary setback for the Russian economy, or is this starting to have a real impact now?
Well, it's definitely having an impact in the sense that, as Yanis said, it's costing Russia money. Russia is still able to export a significant amount of crude and also a lot of oil product, not diesel, which is banned, but other products are going out. So overall, if you step back, According to the IEA data released yesterday, Russia was still exporting a total of almost 7 million barrels of oil and oil product through July. Now, of course, pre-war, that means Russia would have been earning a significant amount of money more than it is today, but that money is still very substantial. It was about $13.5 billion of oil and gas exports through July. So it's enough money to sustain the economy in its current form. Of course, the economy should be so much better if you didn't have the skew towards military spending. If Russia was getting the kind of full market price for its exports, it would be earning a lot more. The economy would be significantly stronger. So you have to separate almost these two issues. On the one hand, the Ukraine strikes are very spectacular. They cause these pictures as you've just seen, but they are not bringing the economy into any sort of crisis. It's sustainable at the current level. It is, however, and the continuing war are blocking the economy from going back to a more normal trajectory. It is effectively a war economy, but 7 million barrels of oil a day being exported, even at a discount, that's enough money to keep the current situation as is for a very long time.
Well, we are going to get back to that, of course, and the countries buying these oil and gas products. But Yanis, I want to talk to you about the other kind of strikes, the Ukrainian strikes on wild berries. This is Russia's largest online retailer. It employs tens of thousands of people, millions of customers all across the country, and Ukraine keeps on striking their warehouses. Is that starting to also affect the economy, would you say?
It definitely is. I mean, I'm not talking about the immediate damage, although that is also sizable. So we're talking about several $1 billion of direct damage from these strikes. But we have to zoom out and have to realize that this year, Ukraine has a completely different arsenal of drones and a completely different ability to hit Russian economic objects. So we're talking about refineries, we're talking about warehouses. Of course, these are objects that are where a small strike can already create a big damage, big fires and so on. So Ukraine is deliberately choosing those. But in my view, the economy is all about expectations. So how are businesses, how are people looking into the future? And this year is different from last year. Ukraine is much more able to hit deep inside Russia. It's able to reach most of the very valuable oil and gas facilities. And of course, if you are an investor in Russia, if you are looking in the future, you have to extrapolate. What does this mean? We are just seeing, I think, the beginning of a new phase in this war, where Russia's economy will be much more in the crosshairs of Ukrainian long-range strikes. And this is, I believe, also why the stock market has crashed this year, why the government bonds are down so much, or why the interest rates are up so much. So this shows you there is nervousness, because this is probably just the beginning of a new phase, not just some separate instances which the Russian government can get under control and has so far gotten under control. But the future, that's where the problem is.
So just some figures here to bring into this conversation. Real disposable income and wages in Russia, they're falling for the first time in 3 years. That's according to estimates from the Higher School of Economics Development Center. Also, Sberbank says between 12 and 15,000 businesses each month are closing in Russia. Now, Vladimir Putin, he's got a pretty upbeat assessment of his country's economy, saying they are indeed recovering. They're okay. However, there are some anxious and angry voices inside Russia. For example, Valery Gartung, he is a Russian MP, and here's what he had to say.
So let's take a look at what we're going to do about the federal budget deficit. Last year it was more than 5 trillion, and now it's approaching another 5 trillion. It's already around 11 trillion in total. What are we supposed to do with this? Start printing money or what? Like in 1992, when prices were rising by 30% every week. Well, we understand that this is not a solution. So money has to be collected somewhere. Yes, I understand that businesses are currently in a very difficult situation. But right now, we are fighting a war, and that war has to be won. We need to raise money, but raise it where it actually exists. Once again, I want to emphasize, in natural monopolies, in the raw materials sector, and in financial sector.
So two quite different assessments regarding the Russian economy. Vladimir Putin says, well, they're doing okay. And this MP, Valery Gartung, talking about the budget deficit over 2025 and 2026, reaching 11 trillion rubles in total. Chris, what do you make of these two assessments? Which one is closest to reality?
Well, for each of them, they both, President Putin and the MP we just heard, they're both reflecting accurate positions. In the sense, President Putin's priority is to maintain stability. He uses that word a lot. And for him, stability is where, people have a reasonable lifestyle and that the budget can afford the deficit. He's not that concerned about, the broader economy. He's not concerned about President Putin is not concerned about the broader economy. He's not concerned about the fact that the economy is becoming very skewed towards kind of military-industrial complex, whereas as we've heard from the MP, and also we've heard from many other senior officials since the start of this year. There's been quite a different narrative in Moscow from officials such as the head of Sberbank, also the governor of the central bank, Maxim Orishkin, even the president's economic advisor, have all been publicly critical of the spending on the military, the damage that it's doing to the broader economy, and have been highlighting the fact that while the economy is stable today, as President Putin says, the real damage is about the future. As Yannick mentioned, it's the fact that the economy is becoming very skewed towards state sector, small private enterprises, private sector are all suffering significant damage. And we can see that in sectors like manufacturing, etc., there is a significant recession, and there has been for some time. So their point is that the longer the situation continues, the much more difficult it will be for the economy to return to any sort of normal trajectory, the more expensive it will be. And they're essentially calling for a reassessment of the budget, and by implication, of course, a reassessment of geopolitical strategy.
Yanis, Russia has sold more than 4 billion worth of gold from its reserves this year, leaving the reserves to their lowest level since the invasion of Ukraine. This comparison from the MP to the 1990s, do you think it's exaggerated?
In most respects, it is an exaggeration. There's not the same kind of instability despite the stress that we are seeing. In the 1990s, we had a sort of economic revolution. The Soviet system was dismantled. The new market economy was coming. So it's very difficult to compare. It's a very different kind of crisis. But again, I think, if we want to speak about what Russian businesses are, what Russian investors are seeing, then we have to speak about these long-term bond rates. And at the moment, they are as high as they haven't been since the early 2000s. So in the terms of risks and the outlook of the economy, it hasn't been this bad since when Putin first came to office. And Putin, throughout his time in office, has focused on fiscal stability. He reduced the debt. He wanted to keep the deficit low. This were, his key priorities, like his political DNA. And now we see that the war is challenging this DNA, that he is forced to spend more because, the war just, the money is just needed. And here may be a final point. Of course, the MP in the parliament and Putin, it's a very tightly controlled political system, so they cannot fundamentally agree and disagree. And the MP in the end also says, we have to spend this money. The war has to be won. So let's take it from the big monopoly. So it's not really a criticism of Putin, it's a call for more taxation. And I think that more taxation will be one of the answers.
Vyacheslav, you mentioned earlier who actually buys Russian energy. And as it happens, we, of course, have a graphic of that, too. And I want to just show you what it looks like here in terms of who are the main buyers. When it comes to Russian crude oil, of course, you mentioned China. They make up of more than roughly about half of all the exports there. Coal as well, China. But then when it comes to LNG and pipeline gas, we're looking at EU as the main buyer of all of those. These figures, what do they tell you? That both European countries are still a major buyer of Russian energy. And then, of course, you've got those Asian countries, China and India, as the main ones when it comes to coal and crude oil.
Yes, as for the statistics with the European Union, I think I can call it the final breath. So, because there are some packages of sanctions, and the 21st is coming now with total ban of Russian LNG supply and actually Russian pipeline gas as well. So next month. So I think the key element of this Russian energy strategy and oil and gas exports again is Oriental markets, in general the Asia Pacific market. And I think because there is a shortage which is increasing within the few months and upfront, we have the key buyers like China, which they already expanded a lot of, as I said, purchases because their reserves are at the minimum.
Chris, briefly here towards the end, there are discussions about more sanctions, possible tariffs on countries buying Russian energy exports. Just briefly here, if the war continues in Ukraine, if the war continues in Iran like it does right now, how long can Russia survive?
Well, it is a balance. As you say, the war in Ukraine will lead to more sanctions, therefore more difficulties, although not insurmountable, as you've seen. Whereas the continuing war in Iran means that Russia is getting a much better price and has got a much bigger willing audience, or audience of people willing to buy and ignore the sanctions threat. So this current combination means that Russia can remain stable and its geopolitical position can remain unchanged for years. I mean, I wouldn't like to say, are we talking about 2 years or 4 years, but you can definitely say at this point in time, indefinitely.
All right, with that, we're going to have to wrap it up, this discussion. Thank you so much, all three of you. Chris Swiefer, CEO of Macro Advisory, Yanis Kluge, Senior Associate at SWP Berlin, and Vyacheslav Michenko, Russian energy analyst. Thank you again for joining us here on Counting the Cost. And that's it for our show. Get in touch with us. You can do that on X and use the hashtag AJCTC when you do. You can also drop us an email, countingthecost@aljazeera.net. That's our address. Of course, there's also more for you online at aljazeera.com/CTC. That'll take you straight to our page, which's got individual reports, links, and entire episodes for you to catch up on. And that's it for this edition of Counting the Cost. I'm Pranay Berg from the whole team here in Doha. Thank you so much for joining us. See you next time here on Al Jazeera.